Hello and welcome. You're watching Business Today TV and this is Markets Today. I'm Sakshi Batra and on this show we discuss everything about the stock markets, opening action as well as what you can expect going forward from here. The key strategies that you must adopt and the stocks and the sectors that you must focus now. All of that will be discussed, and joining in is a very, very special guest with me. Nilesh Jain joins in from Centrum Broking. He's a technicals and derivatives expert and we're going to be asking him what exactly is he seeing on the charts as far as the Nifty Bank is concerned. Good morning, Nilesh, and thank you so much for taking the time out for us. Well, yet another week has started, but on an very, very volatile note because we are seeing that the markets are swinging between the red and the green right in the early trade. Right now, if we see 17,428 for the Nifty, although there's a mixed trend that we are spotting on the sectors right now, the volatility index is seeing a rise of almost 5% now, although a tad bit lower than the 20-odd mark. But what does the setup really tell you? Globally, we got mixed cues, and again, we've also started on a sticky wicket.
Very good morning to you, Sakshi. Sakshi, in fact, if you look at the overall structure, that what we are witnessing in last 3 weeks is that the bulls are dominating certainly, and Nifty is trading above its all long-term and short-term moving averages. The momentum indicators and oscillators both are in buy mode. Although they have reached the extremely overbought territory, certainly it is not giving high conviction at high levels to go long in the index. But I believe that the bias should be positive. One should wait for some sort of a decline for a fresh entry. Even if you look at last entire week, we have seen market showed resilience as every dip was getting bought into 17,200 for the Nifty index, which has acted as a major and a crucial support zone. Now, on immediate basis, I believe 70,300 till the time Nifty doesn't violate that particular level on the closing basis, the overall structure is indicating that Nifty is likely to test 17,500 on immediate basis. And going forward, for the August series, we are keeping an eye on 17,800 to 18,000 levels, and the bias is positive. Dips should be utilized as a buying opportunity. On the other hand, if you look at the Bank Nifty, we have seen huge amount of outperformance in the July series in the Bank Nifty. But somewhere the exhaustion is coming at the high levels. It is not able to sustain above 38,000 mark in this spot. So that is again acting as a psychological barrier. So one should wait for a good healthy correction in the Bank Nifty for fresh entry. At current level, there is no trade in the Bank Nifty at high levels.
Right. Also, Nilesh, as per you, which are the sectors that one should really focus on this week? Any particular sectors that are coming on top of your charts that may be leading in momentum?
Right, absolutely. So looking at the overall momentum that we have seen in defensive basket, to be specific, FMCG, that is certainly showing some signs of strength. So watch out FMCG pack. Also, Nifty Auto Index, which is trading near all-time high levels. We have already seen it has reached all-time high levels in past couple of weeks. Now, looking at the some sort of a correction that we have seen in the last week in few auto stocks, again, a fresh momentum is likely to getting built up in Nifty Auto Index. Just want to name few counters from that particular space. TVS Motor, Maruti, Hero Motocorp, these are the few counters. Watch out for that. Tata Motors DVR, that can be added on declines. And also, apart from Nifty Auto, FMCG, watch out for sectors like Nifty Metal sector, where we might see a sort of a pullback. So if somebody wants to play for a pullback, then metal could be a good space.
Understood that. Now, the big talking point today also, Nilesh, is the big SBI numbers that we saw over the weekend. Of course, we do know that the country's largest lender reported a 6% drop in its standalone net profit, which stood at 6,068 crore rupees for the first quarter of June 2022. The NIMs are down over a 4-quarter low at 3.02% as well. In fact, this is the first quarterly drop of deposit growth that we've seen in the last 22 quarters or so. So there's been some kind of disappointment and the stock has reacted down. About 2.5% down it opened at in today's trading session. But the brokerage houses are still quite positive. I was reading a whole lot of reports this morning from Macquarie to Motilal Oswal. All of these, broking houses have a 600 plus target. Tell me your particular target if you've come out with a target post the earnings on SBI. And what do you really suggest all the investors and traders already invested in SBI should do now?
Well, Sakshi, technically, if you look at it, has witnessed a good copybook style triple top sort of formation. near 540 and 550 zone. We have seen earlier as well. Nifty, the SBI has found resistance, and from those levels we have seen multiple time corrections, and this is what is happening now. But I don't think that there will be the correction will be a larger. It will be a small correction because we have already seen a good amount of rally ahead of the numbers. So usually this is kind of structure that we have seen in many stocks ahead of the numbers. If stock already rallied, then we are likely to witness some sort of profit booking. That is what we are witnessing currently. Now the broader structure is definitely looking very strong. Going forward, we may see SBI again hitting the highs of 550, and we are having a position target of 600. Maybe near Diwali we may see those kind of levels. But as of now, at current levels, it is not advisable to buy at current level. Better wait for some sort of a decline towards the levels of 500. So that is the psychological support zone, and that could be an ideal entry for the fresh longs. On the higher side, immediate basis, 540 will act as a major hurdle, and above that we are definitely heading towards 600 levels. So give some time, stay invested. From PSU banking space, SBI continues to remain our preferred bet.
Okay, so from the PSU banking space, SBI remains a preferred bet. No fresh advice to buy at this level. Wait for some dips in case you want to invest in SBI for the long term. For those who have already invested in it, there will be these dips, but then in the long run, there could be some positive upside that you may see as well. 600 plus kind of targets. Right here, we are talking about. Apart from this, Nilesh, any particular top recommendations for all our viewers for today?
All right, Sakshi. So, in fact, as I mentioned, that we are liking FMCG basket. So overall, FMCG pack has witnessed good amount of correction, and now a bull trend has again resumed. So the stock that we are liking is Dabur and Kolpal both. In fact, at current level, Kolpal is on the verge of a major trend line breakout. So we are assuming that going forward, we may see this kind of breakout to come in. So at current level, Kolpal can be added, and for the upside target of near about 1680 to 1700, the stop loss should be placed below 1570. So from FMCG pack, Kolpal and Dabur both are looking positive. From IT pack, if you look at one of the outperforming counter, that is Tata Elxsi, and we have seen this counter has been in a bull run. It is in a secular uptrend, and every dip, if you look at in last 2-3 years, was getting bought into. Now today it has hit a fresh new all-time high levels, and it has also given a fresh breakout from its last 6 months consolidation. So at current level, Tata Elxsi can be bought for the upside levels of 9800 to 10,000. So we may see this counter heading towards 5-digit mark. So 10,000 should be the target. The stop loss should be placed below 9300.
Okay, understood that. So Colgate Palmolive and Tata Elxsi, two counters from Nilesh for today. And for these positional investors who want to invest in these two spaces of FMCG as well as the IT space as well. Well, thank you so much, Nilesh, for being with us and sharing all the insights about markets. How does one approach and these specific stock recommendations also with all our viewers.
Thank you, Sakshi.